All right, welcome back. In case you're just joining us, it's time for our conversation. Johnson Chukwu, the Group Managing Director at Cowry Asset Management, is joining us right now from Lagos. Hello, Mr. Chukwu, and welcome again to the program. Let's get started. So many things to talk about, so many market issues. COVID-19 pandemic is still here, not just here in Nigeria, but the whole world, exceeded over 25 million cases globally. And I must say about 17 million people have recovered also globally. US, Brazil, and India account for the highest cases globally. One would say, what does that news mean? It also means that it has affected our Naira. So COVID-19 pandemic and the Naira wars or currency wars. Taking a look at the Naira today, the cash rate for the Naira is going for 440. Against the pound is going for over 500 and 570 against the euro, about 530. The question to you right now is, the CBN is supposed to resume dollar sales on the 7th of this month to BDCs. Speak to me about how this is going to impact the Naira, and will the woes for the Naira be lessened?
Thank you, Nancy, once again for having me. The expectation that CBN will resume sales, according to what the publication by CBN from 7th of September, is already having an impact on the exchange rate of the Naira. What has happened is that the tension or the pressure that was mounted on dollars demand, the demand-supply metrics has, to some extent, abated. Because people have actually begun to feel that come Monday, the 7th of September, they can actually walk to their BDC and buy the dollar. So the concerns that they wouldn't get their supply has moderated. And I think the improvement in exchange rate that you just mentioned, from about 475 to about 430 within a period of 2-3 days, is symptomatic of that abating of pressure. I think that is likely going to continue for the next couple of weeks, because part of the pressures we were witnessing was the small-time buyers or users of FX couldn't get their supply. The central bank was not meeting demands at the retail auction window, and the liquidity that was normally created by the BDCs was not there. So we saw a situation where pressures kept mounting, and people were ready to pay any premium to get dollar. But with the resumption of sales, that pressure will abate, and we should expect that Naira will recover to some extent.
Naira will recover to what extent do you mean now? Because we're seeing the cash rate, like I said earlier, around 430, 440 against the greenback today. To what extent do you see the Naira recovering? Because even at over 400 Naira to the dollar, it's still a war for the Naira.
Yes, it is. But if you consider the fact that the spread between the official window, which is about 380, 382, and about 470, at some point it was actually approaching for almost 500, was almost 100 Naira spread. We're now dealing with a spread of about 50 Naira. And I think if that supply is sustained, and the central bank also, as you may know, the central bank supplied some of the demands of the foreign portfolio investors last week. And that also helped to moderate demand. I think that's the next pressure point that has to be addressed. If the central bank should meet the demands of the foreign portfolio investors who have sold their investments and want to exit, then you're going to take out a major part of the pressure. Remember that the natural demand which comes from importation will also slow down, because we are seeing a collapse of consumer demand. So you are not going to see so much of pressure from importers to replenish stock, because there's no demand, there's no local demand. So expectation is that import bills will decline as much as maybe 30-40% decline on import bills. So that will also help to moderate the demand in the market. So if you can meet the demand of foreign portfolio investors and meet the demand from the BDC window of small retail traders, those who buy $5,000, $10,000, $20,000, then you will take out a lot of the pressure in the market. And I think, should that happen, we could see a market spread of between 20 and 30 naira between the investor and exporters window and the parallel market window.
With this policy that the CBN has come up with, at least the resumption of FX sales to BDCs September 7, how do you see it impacting those that really want to exit? Because the CBN governor said some months ago that there should be no cause for alarm. If you want to, you can come in and you can go out when you choose to.
The BDC window is not a window which foreign portfolio investors will exit from. Remember that foreign portfolio investors always ask for capital importation certificates so that they can buy money from the official windows. The BDC window is largely the informal window that is designed to meet the demands of small-time FX users. The foreign portfolio investors still have to meet through the official windows. So the central bank must, as far as I'm concerned, as a matter of urgency, meet that demand. Bloomberg said about 2.5 billion.
Mr. Chukwu, I understand that. At least the BDCs cater for perhaps most of the retailers. Let's put it that way. Now, where I was actually driving to is that what impact will it make, especially at the official markets? We have the I&E window, we have the SMEs, of course, the official rate of the naira to the dollar is 379. So with the resumption of sales to BDCs on Monday, how do you see that impact on those segments where investors can come in and go out, entry and exit when they like? I hope you understand the rationale behind my question. I hope I'm transmitting it well.
Yeah, let me try to explain if I understood you well. Remember that the markets, some of the markets are kind of in silos or segmented. What I mean by segmented is that the demand at the retail window hardly finds itself into the official window. Those are people who are doing transactions that do not require, they want to pay school fees. Somebody wants to pay a mortgage outside the country. He doesn't want to do from A. And then you have bits and pieces. You want to make remittance to your dependent who is a student somewhere. You don't go through the official windows. You don't want to go through the burden of establishing a Form A. So for that reason, the demand that is most inherent in the BDC window hardly translate out to the official windows. So the key thing is that unless we have a convergence, we have a merger of those multiple markets or multiple exchanges, if we still have to continue with the segments we have, you find out that operators like the foreign portfolio investors are only active in the official windows. One, they wouldn't want to patronize the parallel windows because of the divergence in rates. They wouldn't want to, there's no foreign portfolio investor who can explain to his bosses over there in Western countries that he had to buy money at the parallel market of 430 or 440 when they know that the CBN window is in the region of 386. So that the investor exposure window is in the region of 386. Nobody can actually explain that. So you have some level of segmentation in the market that will not allow does not really encourage the crossing of transaction from one window to the other. It only happens when one market window is unable to sustain supply. Take, for instance, assuming the central bank continues to fail to meet the demands of foreign portfolio investors, then the foreign portfolio investors will just want to jump out. And that's the time when they are ready to sacrifice whatever profit or part of their capital to buy from any of the windows. So until that you get to that point, which is a point of desperation, I do not see the CBN window having direct impact on the foreign portfolio investors. Let me also explain something. Foreign portfolio investors will only resume their investment in the Nigerian market if those who are trapped are able to exit. It's a very simple logic. If you have your colleague who has gone into a market and is trapped and can't come out, you must be something else to want to jump into that market at the same time, believing you will exit. So the first thing to do is create liquidity in the investor and exporters windows segment so that foreign portfolio investors can exit. Once they exit, new investors will come in, and that liquidity will now be sustained. You will now have flows, inward flows from foreign portfolio investors. But until that is done, you are likely going to see a lot of foreign portfolio investors who are even interested in the market, staying by the sideline and watching to see how those who are already trapped can come out.
Okay. Hello YouTubers, welcome to Moneyline with Nancy TV YouTube channel. This is where we provide you with instructive business directions, processes and guidance to help you assess the right resources to fund your businesses to withstand every form of internal and external shock. You will find here awesome informative videos on business, entrepreneurship and lifestyle just to help you make informed business and financial decisions. Punch the subscribe button and let us drive you through the world of business. Please follow all our social media platforms on Facebook, on Twitter, on Instagram, on LinkedIn, and follow us for latest updates on our website. Just a few days ago, the CBN came up with a policy eliminating middlemen, talking about the Form M applicants, that payments will be made directly to the ultimate providers of goods and services. What's your thoughts about that policy? Because we've seen a lot of analysts, a lot of people coming out to say that was not well thought out. What do you think?
Well, I was among the first people who responded the very next day. I think I responded to it on one of the national programs on 25th of August. And my position was very clear. And I'm happy that a lot, even the private sector operators, business have joined the same position. Those positions were very clear in the first place. My take is that we are coming from a period where the challenge was under invoicing because people wanted to avoid customs duty payments. Then what is it that motivated them to move from under invoicing to over invoicing? The reasons why anybody would over invoice are this. One, you are so desperate to take out your money that you are ready to pay duties on goods that didn't come in. And you know that paying duties on the goods that didn't come in is a direct state loss. So in that case, you are ready to cut your approach and let me cut my loss, take out whatever portion of the money that I can take out. So, and that will happen is if the windows for the official access to official funds are closed. The second reason why anybody will want to over invoice is because that person clearly has a desperate need to exit the Nigerian market. And it could come in the form of you really have your proceeds and you want to exit, or there are such critical payments you need to make and you are not going to get those funding from the normal windows, and therefore you have to take a cut or a loss by invoicing. There is no reason why anybody wants to pay duties on goods that didn't come in if you can legitimately make your remittance from any of the windows. The second concern is that a lot of small importers may not have the capacity to buy from original equipment manufacturers. So, and for that reason, they go through aggregators or wholesalers who buy from the original equipment manufacturers and then resell to those small traders. Nancy, I doubt if you can go and open an LLC with Toyota Japan to buy a Toyota vehicle. It's impossible. They're not going to even acknowledge your mails. If you want to ask them to send you a pro forma invoice because you want to import one unit of a vehicle from them. There are several of such large-scale manufacturers that are not going to be dealing with multiple traders who are coming to buy goods worth $5,000 here, $10,000 here.
How about the rationale that the CBN also put forward? You've talked about over-invoicing, about the overhandling of charges, as well as transfer pricing, as well as, so some of the ethics. And the CBN did say that this is also a global best practice. So it is that we should follow global best practice. Is that rationale enough? Or are those rationales enough?
You know, I did mention the issue of over-invoicing. I started with over-invoicing. What are the motivations for over-invoicing? Is because those who want to exit, who have legitimate need for FX, cannot access FX. And therefore, they're ready to pay duty on goods they're not bringing in. Because that's the only window they have left to take out their money. There's no justification where a business person will pay duty of 20-30% on goods that didn't come in, because that's a strict loss on the person's P&L. So that is happening because over the past couple of months, investors, traders have found it difficult to access FX to make payments to their suppliers. A lot of investors are in default of payment to their suppliers. Foreign portfolio investors are trapped. They can't leave the system, the economy, because they are not getting FX. And therefore, these people are looking for creative channels to take out their money. That's the only reason why So if we create liquidity in the market like they're trying to do now, meet the demands of the foreign portfolio investors, and then inject liquidity through the BDC window so that small-time traders can access $5,000, $10,000 to continue with their businesses, then there won't be any motivation for over-invoicing. The concept of over-invoicing is a misnomer because no business person wants to pay charges that are not beneficial to him or her. Like I did say earlier, all my life as a banker and until recently, the concerns have been that customers were under invoicing, which was why Nigeria had to appoint inspection companies, inspection agencies like SGS and what have you, Cotecna and all the rest, then to do a pre-shipment inspection to be sure that goods being imported are or not under invoiced. But now they reverse the case, so we have to take out the motivation and then we'll address that. Okay. Then back to the aspects. Okay, good.
Okay, no, okay.
Let's take your next question.
Okay, I wanted to put this in, because we've seen in the last few days policies coming out from the Apex Bank. The circular to banks yesterday, September 1 rather, on the savings rates being about 10% of MPR. What does that mean to an average Nigerian saver?
Well, I would look at two types of savers. There are savers who have a reasonable amount of savings in their position or with their banks. Those ones may be used to have some bargaining power, but that bargaining power is now transferred to the bank's position because the banks are going to be saying the central bank wants us to pay 1.25% because 10% of 12.5% is only 1.25%. Then those ones will be at disadvantage. Remember that inflation rate is about 12.82%. Then you're earning 1.25% of your savings. So it discourages savings in an economy of this nature. The other segment are those small-time savers who are saving about 20,000, 40,000 naira, 50,000 naira, 100,000 naira here. I understand that recently that banks have stopped paying them interest on their savings. So they are the ones that will benefit from this. In as much as they say the rate that they'll be getting is inconsequential, but it still adds up than a zero interest rate. I understand in the rural areas, because they don't have strong bargaining power, the banks said, okay, they can't pay interest on amount less than 1 million or what have you. So somehow that may be the purpose that the central bank made this policy, because if you look through that circular, it obviously wants to ensure that the banks continue to pay interest on savings accounts. So maybe it's designed for those who the banks had stopped paying interest because their savings were small.
So your savings are small, but you're still holding my money, and you're holding my money to trade. So they should pay.
For the small time savers, they really don't have. They are weak in terms of their bargaining position because if you live in a rural area and the bank says we will not pay you interest on your savings, you will consider, do I have to take the money home and keep it under my pillow and run the risk of it?
So you consider safety first.
So they are left with no choice than to live with the bank. So I think this policy is actually designed to help them get some reward from the balance they have with the banks.
How about for those that keep their monies in the banks and they withdraw more than 3 times, for example, and they are not perhaps entitled, because there are some products of banks that if you withdraw more than 3 times or so, you are not entitled to a savings rate.
Well, those are specific products in banks, and I mean banks have different designs of their deposit and loan products. So the key thing for any saver is to go to that category of instrument that will allow you to operate according to your demands or the specifics of your business. I know some businessmen who use savings account for their operation. So if you think you can withdraw, you are not going to withdraw frequently, then you can adopt that savings account. There are several products that banks have. There are some that you take, they will not even pay you any interest, but you can run your account as if it's a current account. But the key thing for any banking customer is to be sure that you subscribe to those services that are in tandem with the demands of your dynamics of your business.
Now, let's go back a bit to FX rates, because we've seen different segments for FX, the SMEs, the I&E window, the official, and the BDC segment. Do you think that all these moves by the apex body has it helped to loosen, FX for the country?
Well, the first thing is that the move by the central bank to resume dollar sales, like we all can see, has led to some moderation in the exchange rate. So if you, and it's very simple economics, like say the Wolonis economics 101. If you improve supply of any commodity, and the demand does not increase, the price will moderate. So that's what we're witnessing today. So like I said, the central bank also need to do the second leg of it to eliminate some of these speculative pressures, and that is to attend to the demands of foreign portfolio investors. There's also what you call you call it it's a show of power or show of capacity, even if it's illusory. In the military, sometimes the military will come up with a lot of military hardware and start parading around to show that they have capacity to counter any negative force. Even if they don't have that capacity, if the central bank needs to come out and do a show of force, which I think sometimes then from former governor central bank did, and then you come out and meet the demands, clear the market one day. When you clear the market one day, those who are holding positions in FX, believing that the prices go up, will panic and begin to supply the market. And even those who are on standby or on the sideline watching to see how the market will move, they will want to come in and say, look, because rates are going down, let me now sell before the rates go down further. So sometimes you need to do that. It's a strategy that has been used several by the military, and it has worked. You intimidate your opponents and give them the illusion that you have so much capacity. So the central bank needs to come with a show of capacity.
The capacity we are talking about, Mr. Chukwu, is $35 billion in FX. So how do you? Isn't it? That's the capacity we're talking about, at least for the Apex Bank. So how do you trade the naira right now with the FX reserves of $35 billion? With inflation rates going higher at 12.82% for the month of July, I think, yes, July. Then the forthcoming MPC meeting this month. So if you're saying that the CBN, for those watching, for example, and you're saying the CBN should do what they call in Igbo, Akmobi, that is our chest up. you know who we are. You know who we are is on $35 billion. So for someone watching now, how do you trade all the things, the parameters which I've mentioned? From your analysis
let's take it back to the same palace. There's a song that Fela sang, Shakara.
Shakara Oloje.
I will kill you, I will kill you, I will kill you, I will scatter you. It's just Shakara. The guy don't get power. But by the time you see that intimidation, you may back down and hope, believing that this guy, there must be something behind him that is making all this trade. If you look at the central bank reserve about 35.6 billion, the demands, or according to Bloomberg, of foreign portfolio reserve just about 2.5 billion. Take out 2.5 billion from that, you still have 33 billion. With 33 billion, we are comfortable. But the impression it gives that the country is willing to meet the demands of any portfolio investor. And then the other portfolio investors who are still considering our assets as attractive, remember there's still no more instruments that are giving them close to 10% yield. When in other countries they're having negative interest environment, they will come back to that environment. Their greatest concern is that they are not sure they can exit in the market and there's no stability in the market. When we've seen just a simple fact that the central bank said sell to BDC will resume on Monday, the 7th of September. We will sell 20,000 to each of the BDCs. We saw a sudden moderation in rate. What happened was a lot of people who are holding positions in FX and saying, let me sell quickly because liquidity will come into the market from next week and rates will moderate. And then it becomes self-fulfilling prophecy. Rates began to moderate as people are trying to exceed their position in FX out of fear that rates will moderate. So similarly, if the central bank show that capacity and then come to the market and say, look, we'll meet all the demands of all the foreign products. Even if you do 50% of their demand, you create an illusion that you have capacity. And then others will want to come in. And maybe the inflows from new investors will offset whatever you have paid to existing investors.
So am I taking that you're bullish on the Naira? And if you are bullish on the Naira from your own analysis, where will that strength come from? Because if you take a look at our oil price, it's still not our oil price. We are not in charge. But oil price is trading around 45. The highest so far has been $46 US. So if you're bullish, where do you think that strength will come from for the Nigerian currency?
Okay, the measures, the near-term improvement will come from portfolio investors, which is why I've emphasized so much on encouraging portfolio investors to resume their participation in the market. It's one segment that can give us $10 million every month. I mean, if you looked at what we used to have as foreign portfolio inflows into the economy, and particularly, like I said earlier, we have an environment, global environment, where yield on a lot of government instruments is quite low. And our yield is still attractive once we restore liquidity in our FX market. The second aspect will come from, we've seen some minor improvement in crude price. We saw crude price trading about $46 per barrel. So we will see at least some stabilization in our foreign exchange earnings from crude oil sales. And I also know that the government is in the process of selling some assets. As you may know, the DPR, Department of Petroleum Resources, is currently auctioning about 57 marginal oil fields. So by the time they complete that in September, there will be signature bonuses that have to be paid to the government. Those signature bonuses could run into thousands of millions of dollars. And that will tidy us through maybe 2 or 3 months. So, and these are sources that will give improve the capacity of the central bank to intervene in the market and help further stabilize the FX regime. I also mentioned earlier in our conversation that even demand is likely going to moderate. There's a very weak consumer demand today. So you're not going to see the normal Christmas rush by importers to bring in goods because they've not been able to sell what they have in their warehouses, in their stores. The demand will moderate, so the demand for FX will not be as steep, as high as it was previously. So if we can work towards some level of improvement in supply, I believe if the central bank is meeting the demands of those who have legitimate needs, the pressures will abate, and we should see a positive correction in the exchange rate or Naira exchange rate.
Okay. What shape of recovery do you think should happen for the Naira? Like I always say here on the program, not just shape of recovery for the economy, because our GDP contraction minus 6.1% in the second quarter of 2020 as released by NBS. We are waiting for the third quarter, but are we also looking at the Naira with what the CBN is also doing? What shape of recovery? Because we've seen the Naira depreciate at least in the last few years. I remember when the Naira was trading for 150, 165. It's moved up, to where it is right now, close to 500 just a few weeks ago. Now, with these policies by the central bank, we've seen the kind of moderation. So what shape of recovery do you expect for the Naira? And what is the fair value of the Naira right now amid the pandemic? Is it a W shape, L, U, V? I think I need to explain to my viewers on a later date what I mean, with these alphabets. But speak to me about that.
Okay, what I think is that we could, like you saw, a sharp recovery in the exchange rate from, like you said, just a week or thereabouts. We were almost touching 500 Naira to $1. And all of a sudden, within a matter of 3-4 days, the price had gone back to $420, $430 Naira to $1. So I think in terms of further appreciation of the Naira, maybe we should be hoping that we should you can still achieve about 10 naira, 20 naira appreciation to maybe in the region of 410 to 420 naira to the dollar based on the current fundamentals. I think if we achieve that, that should give us some level of comfort in the meantime. Going back to the era of 150, 280 naira to dollar is not a near-term expectation. A lot of improvement and foreign exchange earnings have to take place. Crude price and crude production will have to recover substantially, which is not foreseen in the immediate future. You will need to see the restoration of flows from diaspora remittances, and you will also see a major uptick in foreign portfolio investment. So I think in terms of fundamentals of the economy, it may not support a 260, 280 naira to a dollar. We have to be ready to live with a 400 days, lower 400 range for the dollar in the meantime.
I'm still stuck on the naira somehow, but I have other questions too for you, because you are a practitioner too in the equities market. So we've seen the equities market seeing a kind of advancement in the past few days, despite the GDP contraction of 6.1%. That's for the Nigerian economy. Are you still strong, or are you strong on equities? What's actually moving that market?
Well, what is driving the equities market? Largely the absence of alternative investment instruments. For individual investors, institutional investors other than banks, the yield on fixed income instrument is quite low. We are seeing yields on treasury-based instrument in the region of 1.2, 1.3, at best 3%. And we know that some of the equity instruments are giving you dividend yield of more than 5%. So in terms of if you are a medium to long-term investor, you are likely going to go to the equity side of the investment portfolio instead of the fixed income space because of the low yield from fixed income instruments. Again, if you look at some sectors of the economy, if you look at the GDP, Q2 GDP figure, you saw the likes of financial institutions, particularly banks, that gained more than 18%, grew by more than 18%. We saw the telecommunications sector grew by 15.06%. So we saw agriculture sector grew by about 1.5%. So these sectors that I view, you can see this is dovetailing in the performance of the equity. If you look at the performance of the equities of agriculture, two of the agriculture quoted companies, Okumu and Nestor, and Okumu Oil and Prisco, you will see a lot of appreciation in their equity prices. Similarly, some banks have remained relatively strong. They may not have been so much rallies, but they remained relatively strong in the past couple of months based on the performance of that subsector. And then the telecommunications sector is also quite strong.
So what is the investment strategy for an equity investor to adopt now? From your analysis, is it that of dividend investing or value investing?
No, for now, depend on the, one of the things I always said, before you advise an investor, you have to look at the motivation. Is the person looking for income or looking for long-term investment capital gain? I think...
but the market should be able to offer any of the things I want.
Yes, that's what I'm saying. And now, okay, now let's move to that. For those who are looking for short-term investment returns, we focus on those institutions that have strong dividend payout ratio, particularly those who have history of paying interim dividend. Because remember, we are going to go into the benefits season very soon. Now we're expecting the results of most of the companies' half-year results, particularly the banks. And of course, the figures are beginning to come out. And a few of those institutions will declare interim dividend because they have track record of payment of interim dividend. So for short-term return-focused investors, we look at instruments that have records of the interim dividend. Then for value investors, what we look at, those are people who have the capacity to stay for the long haul. And we're looking at those as equity that are currently trading below their intrinsic value. And the number of equities that are trading below their intrinsic value because of the economic climate has pushed down the equity prices. Some of them are trading even below their net asset value. So those long-term value investors, we focus them and direct them to those such instruments.
Okay. I have two questions for you before we end the interview. The forthcoming MPC this month, that's, I think, the second to the last before the end of the year. For our viewers, MPC is normally done 6 times a year. You have January, March, May, July, September, then November, 6 times. So the September meeting will hold this year. What are your expectations? Inflation at 12.8%. The equities market seems to be rising, but there is a big elephant in the room too. Not just inflation, GDP contraction may also contract in the 3rd quarter. FX volatility, where does it really put the MPC, this September meeting? And don't forget, rates was reduced within the year to 12.5%. So what do you expect?
I think given the current environment, the tendency for the MPC to hold rates at the current level is quite high. One, you have mentioned most of those variables that will influence their decision. You're looking at increase in inflation rate to 12.82%. At the same time, the economy is contracting. The economy contracted by 6.1%, and it's expected to go into a recession in 3rd quarter of this year. So you are not likely, the MPC is not likely going to come up with a policy that will focus on inflation and say they want to limit inflation, and then they want to adopt contractionary monetary policies, which will worsen the current growth of the GDP. Will worsen the expected contraction in the GDP in Q3. So the MPC is actually facing delicate economic situation. One, you can't afford to tighten because that will worsen our current economic growth prospects. At the same time, you cannot afford to loosen, because when you loosen, you're going to put a lot more pressure on inflation and also a lot more pressure on the foreign exchange demand, given your current reserve and given the pressure you're already facing. So I think, given the contradictory environment, economic factors, the most appropriate thing I expect the MPC to do is to hold rates at current levels.
Okay, all this Beke and Turenchi and what's the Yoruba word for English? I can't remember now. How should the average Nigerian watching us now, taking these stories we've been saying in the last few minutes, digest it and chew it? How does all this now affect the average Nigerian watching us and say they have come again? No, you know, what does it mean for an average Nigerian?
Okay, the average Nigerian, what they should know is that the economy will slow down, but it's not likely going to worsen more than what it was in the 2nd quarter of this year. Then thereafter, we should expect a gradual recovery. The average Nigerian should know that prices could go up slightly more as we approach the Christmas seasons. 2 reasons: we're seeing increases in fuel prices. The NNPC is actually going to come out with a new pump price, given that crude oil has moved to $46 per barrel. We've seen an increase in electricity tariff. These things will all translate into higher consumer prices. So the average Nigerian should expect that the price of goods will further move up. Maybe not as steep as it did in the month of July, but slightly move up further. And that the opportunities in the economy will gradually begin to open up, but at a very slow rate. So we should not brace up for some level of tightening in the next couple of months.
So it's fasten your seat belt. You're saying it in a very calm, with a very calm demeanor, but it's not an easy thing because these numbers affect human beings. It's not just numbers, they are human faces. So let's just fasten our seat belts. Thank you very much, Mr. Chukwu, for joining us today again. Have a lovely day. Thank you for watching our video. Please hit the subscribe button below, turn on post notification to follow all our updates.